We are just minutes away from the opening bell on this Tuesday, November 11th, and the market is clearly locked onto Datavault AI, ticker DVLT. As of this moment, while the market was officially closed yesterday at a flat 1.63 USD, the pre-market session is telling a completely different story. Right now, bids are flying in, pushing the stock to 1.76, a jump of nearly 8% before a single regular session trade has been executed. This isn't just a random morning drift. This is a direct response to a major and, frankly, aggressive corporate action announced just hours ago. The expectation for many has been that Datavault is just another volatile small-cap AI and Web3 company riding the coattails of a popular narrative. The reality, as this morning proves, is that Datavault is in the middle of a high-stakes war with short sellers, and management just dropped a strategic bomb. This morning, Datavault AI announced its board has approved a special distribution to shareholders, a Dream Bowl Draft meme coin. This isn't a cash dividend, it is a digital asset, a collectible, that will be distributed to all shareholders of record as of November 25, 2025. The critical date here, the one causing this pre-market surge, is the ex-dividend date of November 24th. But the real story is in the press release's fine print, where the company took the highly unusual step to address short sellers directly. The company stated that any short seller who has not returned their borrowed shares by the ex-dividend date will become naked short on dividend meme coins and will be legally obligated to find and deliver these new, unique digital assets to the shareholders they borrowed from. This isn't just a dividend, it's a corporate maneuver designed to create a settlement crisis for anyone betting against the stock. For weeks, the general belief around DVLT has been one of polarization. You have a retail investor base, active on platforms like X and Reddit, that sees the company's vision of tokenizing real-world assets, or RWAs, and its AI-driven data exchange as the next big thing. They see the 467% year-over-year revenue growth reported in the second quarter, even if it was from a small base, as proof of execution. On the other side, you have a deeply skeptical institutional and short-selling crowd that views the company as all promise and no profit, pointing to its significant EPS losses and a business model that sounds more like a collection of buzzwords than a coherent operation. This skepticism was crystallized on October 31st when the well-known short-selling firm Wolfpack Research issued a scathing report targeting Datavault and its CEO, Nathaniel Bradley. That short report set the stage for the battle we are seeing today. The common expectation was that such a report would send the stock into a death spiral. The reality, Datavault is fighting back and hard. On November 7th, the company filed an 8K with the SEC, revealing it had filed a formal lawsuit in federal court against Wolfpack Research and its owner, Dan David, for what it calls a malicious short and distort campaign. Datavault is seeking monetary damages and is accusing Wolfpack of spreading false and defamatory claims to manipulate the stock price for its own financial gain. This is not a typical corporate response. Most companies issue a vague press release refuting a report. Datavault is taking their attackers to court. This legal battle, combined with today's meme coin dividend, paints a picture of a management team that is going to war for its shareholders, using every tool at its disposal. This brings us to the short-selling situation, which is now the single most important factor for this stock over the next 2 weeks. Let's look at the data. As of the most recent reports, the short interest in DVLT is significant. We're seeing figures in the range of 9.7 million shares short, representing over 7 to 8% of the company's entire free-floating stock. While that percentage isn't the highest on the market, the cost to maintain those short positions is. The borrow fee rate, the annualized interest short sellers must pay to borrow the stock, has been hovering in the double digits, recently seen between 11.5 and 14.7%. This is an expensive, painful rate, and it signals that the shares available to borrow are scarce. But the most telling data point is the fails to deliver, or FTDs. In late September, FTDs for DVLT exploded, with one day showing over 12.7 million shares failing to settle. Fails to deliver occur when one party in a trade fails to meet their delivery obligations. When it happens on this scale, it often suggests a severe dislocation, potentially related to naked short selling or an inability to locate legitimate shares. Now here is the actionable insight for anyone watching this. Today's dividend announcement is a direct attack on that short position. By issuing a digital asset with no clear cash equivalent value, Datavault has created a nightmare for short sellers. They cannot just pay a cash equivalent. They must, by rule, deliver the dividend. To do that, they must either buy the stock back to close their short position, which is called covering, or somehow find a meme coin on the open market to deliver, a market that will not exist. The company has effectively set a hard deadline of November 24th. Any short seller still in their position on that date is trapped. This is what you need to watch. Monitor the borrow fee rate on sites like Fintel or Ortex. If that 11 to 15% rate suddenly spikes to 50, 100 or more percent as we approach November 24th, it is a clear signal that panic is setting in and shorts are scrambling to find shares. This is the textbook definition of a company-engineered short squeeze. What's your prediction for November 24th? Will Wolfpack Research be forced to cover, or is this all just noise? But a short squeeze is a technical event. It doesn't tell us about the long-term health of the business. So what does Datavault AI actually do? The company, which was formerly known as Wisa Technologies, has two main arms, an acoustic sciences division and a data sciences division. The data arm is what gets all the attention. It's building what it calls the Information Data Exchange, a platform using AI and blockchain to help companies and individuals manage, value, and monetize their data. This includes tokenizing real-world assets, creating digital twins for various industries, and managing name, image, and likeness rights for athletes. The company has announced partnerships with a Tier 1 defense contractor, a comedy club, and is even in negotiations with foreign governments to explore tokenizing real-world assets like natural resources. This is the grand vision. The company is also heavily tied to Silex Holding Company, which has agreed to a $150 million strategic investment in Datavault pending shareholder approval. This explains why Silex shareholders are also receiving the new meme coin, as it binds the two shareholder bases together against a common enemy, the short sellers. The company's last financial report for Q2 2025 showed that this vision is starting to generate revenue, with the $1.7 million figure representing a 467% jump from the prior year. Management has even issued ambitious guidance for 2026, targeting $40 to $50 million in annual revenue. However, this growth comes at a cost. The company's earnings per share for that same quarter was a loss of 54 cents, a significant miss from the 14 cents analysts had expected. This is the core tension of the stock. It's a high-growth, high-spend operation. The bulls see a company investing heavily to build a new kind of data infrastructure. The bears, like Wolfpack, see a cash-burning machine that will never reach profitability. This all sets up an incredibly catalyst-heavy 2-week period. We have the pre-market surge today based on the dividend news. We have the ongoing legal battle with Wolfpack. We have the next quarterly earnings report for Q3 2025, which is scheduled for November 21st, just 3 days before the critical ex-dividend date. And then we have the ex-dividend date itself on November 24th. The future outlook here is a fork in the road. In one scenario, the Q3 earnings on November 21st show continued revenue growth and a narrowing of losses. This, combined with the pressure from the dividend, could force a catastrophic squeeze on the 9.7 million short shares, sending the stock flying as they are all forced to cover at any price. The alternative scenario is just as stark. If the Q3 earnings are a disaster, or if the Wolfpack report's claims are given more credit, or if the $150 million Silex deal shows signs of falling apart, the narrative could flip. If the meme coin is perceived as a desperate gimmick rather than a smart maneuver, the shorts may find a way to navigate the situation, and the stock could collapse after the ex-dividend date as all the dividend capture buyers and squeeze chasers sell their shares. This is the ultimate case of expectation versus reality. The expectation, set by short sellers, is that this company is a house of cards. The reality, being engineered by management, is a complex, multi-front war using lawsuits and digital dividends to change the rules of the game. The company is forcing a showdown. This is no longer a passive story stock. It's an active battlefield, and the clock is ticking down to November 24th. This is one of the most interesting corporate strategies I have seen in a long time. Comment below with your honest take. Is this meme coin dividend a brilliant strategic move or a desperate gimmick?